idea to the world. Got a solution to a big problem?
Welcome to Bloomberg Quint. We are taking stock of HCL Technologies earnings, and to tell us about that as well as the way forward from here onwards, I'm in conversation with the management of the company, Mr. C. Vijay Kumar, the CEO, as well as the president of the company, and Pratik Agarwal, the CFO. Gentlemen, thank you so much for joining us. CVK, I'm sure that it may have been a challenging quarter considering you have a very big acquisition coming through, and now the integration will also be a part of that. Firstly, if you could just tell me a little more about the way forward from here on, what we can expect from IBM products that were bought, and how they will play a role when it comes to the income statement from here on.
Sure. Agam, first let me give you a perspective for the quarter. We've had a splendid quarter. We had a 4.2% quarter-on-quarter growth and 17% year-on-year growth. And this is the highest year-on-year growth since last 7.5 years. So it's really been a huge uptake, and this has been contributed by the peak bookings that I've been talking about in the last year. 3 quarters we had very good bookings. Now gradually that is translating into revenues. So we've started this year with a very strong momentum. And as you pointed out, in Q2, we've already closed the IBM deal. The revenues have started flowing in from July. And we had given some guidelines on what the revenue will look like. Sure. And you will see similar trend panning out during this year.
Okay, all right. Pratik, there has been a contraction in margin sequentially. That was on expected lines, but the contraction here is a little deeper than what people were working with. Can you tell us a little more about where this contraction is coming from?
Sure. So there were a number of factors that sort of delivered those numbers ultimately. First of all, the smaller factors but common factors with everybody, like visa costs, which are once in a year, Forex, which also gave a bit of a headwind this quarter. But apart from that, we had guided towards investment in the SG&A line and above in the direct costs as well, which is what played out. We were last quarter, when we had guidance for the quarter, we had assumed that we would be able to close the IBM deal on May 31st. That got delayed by a month. So those costs are there almost in full, but waiting for the revenues to flow in, which they will start only from July 1st. Sure. So that has been a factor. Apart from that, in the ERS business, since we have broken it out as a separate segment, you will see that there is a reduction in margins in that segment as well. That was partly to do with some one-timers in the previous quarter, but also we are investing in a number of on-site centric deals, as well as investment in that business also, and some cost impacts which we are working to sort of reduce going forward. Okay,
so Pratik, I'm sure investors will be heartened to know that you guys have maintained your EBIT margins guidance because wage hikes are still expected to come into play for this particular quarter, in the second quarter.
That's right.
And at this point in time, for the first quarter, if I'm not mistaken, your margins stand at around 17.1%, which means that there is a little bit of leeway before you guys move back about the mark of 18.5%.
Yes.
Where is that going to come through?
So that is something we expect pretty much from the next quarter onwards. Two large factors. Number one is the deal revenue and margins flowing in. As we had guided earlier, that revenue comes in at a margin of 50% plus EBITDA. And that contributes in a big way. And also there are a number of cost improvement actions which are already underway, which we are sure will start delivering better margins next quarter onwards.
Okay, fair enough. So, CVK, again, if you could tell us a little more about the challenges that you see when it comes to integrating the IBM products. You also had another acquisition, Stonebridge. how does that, yes.
Strongbridge.
Strongbridge, pardon me, yes. How does that come into play, and if that can actually aid you in how it can help you in your revenues?
Yeah. Strongbridge Envision is a digital transformation business. They're in the area of agile consulting and organizational change management.
Right.
So we have several programs in our clients where we are helping them do the digital transformation, agile coaching, and organizational change management becomes a very, very important part of any digital transformation.
Right.
I'm sure you know it's not necessarily just a technology change, it's an operating model and a cultural change.
Sure.
So that's where the change management becomes critical. So this is a small niche outfit with close to $45 million annual revenue. It comes with about 200 plus very strong consultants in the US.
Right.
So we see that helping accelerate our digital and analytics practice, which is the entire mode 2, it will help.
Right.
And coming to the IBM acquisition, we formed a new business unit under products and platform. It's called HCL Software.
Right.
And our vision here is to become the most customer-centric software product company in the world, right? Because it's not about selling software, but you need to make sure there is enough adoption of the software and customer realizes the value. And we're kind of building on that principle. And this approach has really helped us in building the business since the last 40 years. Very, very client-centric and innovation, which is very relevant to the client.
Right.
So we're trying to bring the similar thought process into the product innovations that we are working on. And the transition has gone fairly smoothly. But of course, this is the quarter when all the customer contracts and direct interactions have started. So, I mean, we're continuing to ramp up. The teams are in place. There's a good momentum.
Sure.
All the back-end infrastructure is in place. So we've really started a new software products business starting 1st of
Right.
July.
Right.
And we remain quite optimistic on the business case. Whatever projections that we had when we did the deal, we believe they remain very similar, both on the top line and on the bottom line. So it's going to be a good momentum for the next few quarters.
Okay. Just 2 more questions, very quick ones too. I also want your view on IMS, specifically the legacy business, because I'm reading in some reports that there could be some deflation on account of that. And the second part is, if you could also give me an idea about how financial services is working out for you all, because it's a very mixed picture when I've spoken to some of your peers out there.
Sure. Yeah. So let me start with the infrastructure business. Since this quarter, we are not calling out infrastructure business as a separate revenue stream. It's integrated into the IT and business services segment.
Okay.
And because there's a lot of, as we have been talking about, there's a very thin line between infrastructure applications. There's a lot of integrated deals that we are seeing, which has infrastructure, application, and the digital process operations. Right. So I can give you a qualitative commentary. Last 2-3 quarters, we've signed a lot of big deals, and that's kind of helped build a momentum in the infrastructure business. Even this quarter, we've signed some good deals. And the overall opportunity on infrastructure, I remain very optimistic. There is enough deals in the market. There are very few quality players who can take on a fairly complex infrastructure transformation and modernization and do well. Right. And we are one of them. So we have a unique position, a good competitive advantage, and very high capability, and there is enough market opportunity. So I remain bullish. Cloud migration, while in some pockets it's going to be a headwind, but the overall opportunity of hybrid cloud and infrastructure modernization is still a good growth opportunity. So I'm pretty optimistic on that.
Okay, but about financial services, yeah.
Yes, even this quarter, financial services, though you see a sub 1% growth, but the growth has been more broad-based, and it's been offset by client-specific situation, which we've talked about earlier. We talked about 2 clients, but one of the clients is more or less stabilized, and it is in a growth path. And another client, I think some of the challenges will continue for some time. But there are also enough transformation opportunities in these clients, and we are very happy to kind of work with them and support them in the journey. Okay,
all right. Prateek, and the final question on capital allocation. After you guys are done with capital expenditure, whatever remaining cash is there, you guys have made a bunch of acquisitions now. also the aspect of buyback is now in a gray area, because I'm sure you guys will have to consider a lot when it comes to taxation. What's the way forward? Is there any change planned at all, or do things remain the same as the way they were?
So, I mean, we continue to be acquisitive, which you already talked about. And the dividend for this quarter is the standard ₹2 per share. We will need to see how to factor in the latest recently announced changes, etc.
Yeah.
And we'll figure out what the new policy is going. At this moment of time, there is no discussion on that to make any comment.
Okay, all right, fair enough. Gentlemen, thank you so much for your time. Wish you the best for the future.